Today's show is brought to you by Vanguard. To all the financial advisors listening, let's talk bonds for a minute.
Capturing value in fixed income is not easy. Bond markets are massive, murky, and let's be real, lots of firms throw a couple of flashy funds your way and call it a day. But not Vanguard.
At Vanguard, institutional quality isn't a tagline, it's a commitment to your clients. We're talking top-grade products across the board of over 80 bond funds, actively managed by a 200-person global squad of sector specialists, analysts, and traders. These folks live and breathe fixed income. So if you're looking to give your clients consistent results year in and year out, go see the record for yourself at vanguard.com/fixed income.
Institutional quality in this context is meant to convey a level of professional rigor and expertise combined with low cost. To learn more, visit Vanguard.com.
All investing is subject to risk. Investments in bonds are subject to interest rate, credit, and inflation risk. Copyright 2025, the Vanguard Group, Inc., all rights reserved, Vanguard Marketing Corporation, distributor.
Welcome to Animal Spirits with Michael and Ben. We have an announcement to make. Scammers. There are fake Instagram accounts. I don't know if it's of myself and Ben or Animal Spirits, but they're out there. And I think needless to say, but I guess not needless to say, because we're doing this, they're not us. If we will never, ever DM you first. Promise. I am not in the business of DMing strangers and asking for money or telling them which stocks to buy.
We do not run a penny stock trading scheme. But I mean, can we say that these bots are just trying to, push the brand out further for Animal Spirits? They're trying to find different corners of the market. Yes, they're scammy, but they're trying to push the brand as well.
Okay.
Isn't AI going to make this 10 times worse? Like, is this where we finally get some sort of verification that you're a real human being on social media? Because otherwise, isn't everything going to be an AI social media account, and then it's going to be useless?
I have no comment. I have no idea about the ins and outs of bots and AI, and don't know. But
well, obviously,
anyway,
the social media people, they don't care.
It's not
all
us.
Right. I think I've been on this corner for a little while, saying that we're in a mini 1980s and 1990s bull market. So I had ChartKid Matt do this quick visualization for me. Annualized return by decade. In the 80s and 90s are otherworldly. That's, as far as I'm concerned, the greatest bull market of all time in U.S. stocks. You could make a claim from like the bottom in World War II through the mid-60s. I think we did 15% per year for like 20 plus years. That probably has a chair at the table at least. Not the head of the table, the middle of the table. It's a Larry David middle. But the 90s, 80s, and 90s were 18% per year almost. It was over 17% per year in the 80s, 18% per year in the 90s. Unbelievable run. And the thing about the 90s is there really weren't any major corrections. 1998, the mid-90s had this little banking thing, but there wasn't much in terms of setbacks either. So the 2010s and 2020s, we're looking at around 13.5% per year in the 2010s, 14.5% per year so far in the 2020s. This is kind of a mini 80s and 90s boom. And literally no one predicted it. Not one single person coming out of the great financial crisis could have ever said, we're going to have 2 decades almost of high double-digit returns.
Predicted it. Duncan, we're going to...
I still remember, I went to a ton of institutional investor conferences coming out of the great financial crisis. And all of these foundations and endowments and pension funds were investing from a fetal position. No one wanted anything to do with risk. There's no way anyone could have possibly foreseen this was coming. And obviously the tech AI boom was the big driver, but this was literally out of left, which I guess is a good lesson for what comes next maybe. Like,
sure.
Who knows?
All right, so in that vein, Ben, we got an email. Hey guys, they always say the stock market has returned 10% of the last 100 years, mainly with the old school industrial companies. Why does everyone pencil in 4 to 5% returns just because the markets are high? So this person spoke about productivity, but for the sake of keeping this short, we get right to it. Why doesn't anyone think annual returns over the next 25 to 50 years will probably be more like 13 to 15%?
That's a legitimate question.
No, it's not.
Okay, so hang on. Like in theory, it's a legitimate question, not in reality. But so I looked, so that since 1980, again, probably one of the best runs ever. We had the lost decade in there, which is kind of like a reverse middle finger. 12.1% per year since 1980. In 4 out of 5 really amazing decades.
Yeah.
I had to pull a quote here. This is Charles Dow. I think he said it in 1902-ish. It is always said that while preceding booms have not lasted, this time there are unique circumstances which will make prosperity permanent. So this is definitely a bull market question.
Yeah.
Obviously.
Yeah.
What's your simple answer to why this can't happen? Why we can't have 15% annual returns for 25 to 50 years?
Yeah. No, it is a fair question on the surface, but the reason why it's not possible, and I'm not saying that this can't continue for longer than we thought, because I would have given you the same answer 5 years ago. So I don't know when the 12 to 14% compounded returns end. Hopefully not for a long time. But there needs to be some sort of equilibrium between the economy and the stock market. And we know that the economy grows at 2 to 3% a year.
Yeah, real. We're not going to have like 12%
the stock
nominal
market
growth.
The stock market just can't be growing at that pace, because it will be 5 times, 10 times, 20 times, 100 times bigger than the economy at some point.
Yeah, it would eat everything. It wouldn't. Yeah, the imbalance. It would be.
So for that reason alone, it cannot go on another 50 years.
Despite the productivity,
pretty comfortable saying that.
How about this? The people who've been saying 10% annual returns are a thing of the past. That's what people were saying throughout the 2010s. This is the new normal. This is expect lower returns going forward. Could we still get 10% annual returns? Yeah, we could, for sure.
Yeah.
But the thinking behind, like, listen, higher profit margins, more efficient. AI is going to supercharge that potentially. But the gains would be so large and the stock market would be so big. It would be like 10 people sitting on all of the wealth, and it's impossible.
Remember the book Scale?
Yeah, great book, by the way, Jeffrey West.
And there was talk about the anatomy of animals and how there are limits to how big something could grow, because if an elephant was 100 feet long and 90 tons, just like the physics of the bones, it couldn't work. And the same thing is true for the stock market.
I thought one of his most interesting things in that book was, he said, why do companies and businesses die but cities survive? Like, big cities rarely fail.
That was a great book.
Yeah.
All right. I was reminded of my favorite tweet that I've ever sent. And damn it, why did this pop up? Ugh.
I feel like people still comment on this all the time. And we litigated this in real time. Was this a chart crime or not?
Okay, so anyway, forgive me, whoever, I can't remember where this came from, but whatever. All right, so at the time, there were some people that were very upset because they misread it. They didn't read the tweet. They just looked at the chart. And the chart shows the market cap of the top 5 companies in the S&P 500, which was $4.095 trillion.
It is kind of funny to think.
Which, by the way, that's the size of NVIDIA now. And it compares it to the bottom 282 companies in the S&P 500. And so I immediately was like, hey, wait a minute. This is today. Why would people say this is a crime, a chart crime? There's nothing criminal about this at all. And I'm trying to be objective. I know this is my work, but if you looked at the chart and misread what I wrote, then that's on you. That's not on me.
Right. You explained what it is. People would say, well, you have to have the other pie for the rest of the other 200
Why? Then make your own
stocks.
pie. Then make your own chart. This is my tweet.
True. It also
All
was funny. So you did this 7 years ago, I guess?
So this was from July 2018.
But the fact that these same 5 companies are still the biggest, that's kind of crazy.
Yeah. So it's Apple. It was Apple, Amazon, Google, Microsoft, and Facebook. And believe me, we were there. There was people saying that this could not continue.
Way too concentrated. Yeah. There's no way this can keep going.
And listen, I'll put myself in that camp. If you asked me in 2018, would we still be having this conversation in 2025 about the giants versus the rest of the, I probably would say, I don't know, maybe, but probably not. All right. Anyway.
Or at the very least, one of these companies is going to drop off.
So in 2018, it was equal. The top 5 were equal to the bottom 282. They're now equal to the bottom 411. That's fucking insane. They were equal to the bottom 282, and now they're equal to the bottom 411. So I had Chart Kid make this, just bring it to life a little bit prettier. The Mag 7 is equal to, the Mag 7 is 18.8 trillion. That's equal to the bottom 432 companies.
Jeez. Thing is, you could also, I think Berkshire Hathaway is $1 trillion too. If you put that in there, it's even, we're, adding stuff to your charts here, but
the numbers are getting insane. Here's from our friend Todd Sohn. NVIDIA and Microsoft are almost as big, not quite, but almost touching tips with the staples, the energy stocks, healthcare, and utilities. All of them, all of staples, all of energy, all of healthcare and utilities, NVIDIA and Microsoft is right on their tail.
It's kind of amazing that these sectors made up almost 50% at the bottom in '08 because they're the defensive ones. Also, I looked at this before of the top companies. I think I had the data every 5 years from S&P or something. Like 6 out of the top 10 companies in 1980 were energy companies coming out of the 70s. And now that whole sector is what, 2 or 3% of the total?
But how does the market feel to you? Feeling a little frothy?
We're getting to pockets of frothiness again. I feel like we're starting to have
I would say,
2021 conversations.
I would say, like, remember like the Django jeans? Like, they had the huge pockets. Like, the pockets they're getting baggy.
Wait, can I just ask? I asked this before we got on. I just wanted to make sure you didn't have chocolate on your chin or something. Did you fall off your skateboard or something?
That's a good guess. I mean, I don't skateboard, but it was a similar accident. I was in the swimming pool. I did a dive off the diving board, and not to brag, I got pretty high. And I came down like this instead of like that. And I didn't hit my chin. I didn't bang my face. But as I glided, as I do on the bottom of the pool, my chin rubbed against the.
You're way too old for that kind of injury.
Why?
That's the kind of injury you get when you're like 9 years old.
Yeah, I didn't even realize that it had happened until somebody said, your chin's bleeding. It's like, you got a dart in your neck.
I tell you what, I still enjoy a good diving board too. I'm not gonna lie. When my kids go to the pool and they ask me to come in, it's like,
excuse me, dude, I've seen you dive off pools. What are you talking about? I've seen you dive off the side of the pool without a diving board. So don't too old me.
That's true. I think I did a flip one of those times.
Off the side.
Yeah.
If you had access to a board, are you kidding me? You'd be all over it.
All right. I guess this is getting back to the person who asked, why couldn't the growth continue? And again, I understand why someone asked that question, because we've seen it already, right? For the past 15 years or whatever. JP Morgan in their guide to the markets looked at the CapEx from the hyperscalers. So this is Google, Amazon, Facebook, Microsoft. And they look at the amount of capital spent and then the percentage of operating cash flow. And this was single digits as recently as 2012. Again, getting back to no one being able to predict this. That's part of the reason why, obviously. So now we're tracking at a third of operating cash flow as a percentage. No, sorry, 50. I'm reading this wrong. I'm not gonna lie. My brain has a hard time looking at two different scales on a chart here. 50% operating cash flow going towards this from, I don't know, 10% in 2010 or 12. The amount of money that these companies are spending is getting to mind-boggling amounts. It's not like they're just resting on their laurels and returning money to shareholders. They are in some cases, but most of it's being put right back into the business.
Yeah.
So getting back to your pie chart of all the Mag 7 is as big as the bottom 432. Jason Zweig has a piece that small caps are cheap. Since the beginning of 2014, the S&P has grown at an average of 13.2% annually. The Russell 2000 index of small cap stocks has gained just 7.2%. I think he said this is kind of a historically wide margin of S&P over Russell 2000.
Where's my fanny pack? It's in my car. That's where it is.
You have a fanny pack too still. Jason says, many people seem to be throwing in the towel. This year, investors have pulled $12 billion out of exchange-traded funds, investing in small-cap stocks, according to FactSet. Meanwhile, they've added $150 billion to large-cap stocks, or large-cap funds. NVIDIA alone is 65% more valuable than all the stocks in the Russell 2000 combined. So this is kind of like back in the day when Tiger Woods was the best golfer in the world. You'd say at a tournament, am I going to take Tiger or am I going to take the field? I guess you could say the Russell 2000 is kind of the field at this point. Here's his case for why these companies, and we've heard all the cases for why these companies should continue to underperform. But here's his case for why that it's a decent bet that they're going to be helped. It's worth remembering that most of the beneficiaries of the internet boom weren't the online providers, but rather the consumers, manufacturers, healthcare, service, and materials company that used the emerging technology to streamline their own operations. If the AI boom unfolds the same way, smaller companies could get a bigger boost than the giants. Like you could actually make these smaller companies more efficient. Thoughts? And then I put a chart from Exhibit A in here, looking at the forward valuations. And I guess that's the big thing about large cap stocks now. They just trade at a premium to small and mid because duh, of course they do. But that's a relatively new thing. Your thoughts?
I don't have strong feelings on what's going to work better going forward.
Here's my take. I think one of the reasons international stocks boomed so much this year is partly because the sentiment was so low and the valuations were so low. All it took was a little bit of less bad news for them to go crazy. And the same thing will probably happen with small caps. The valuations are so beaten down, no one wants to own them. And because there's a margin of safety built in, it's just going to take a little bit of interest rates to come down a little bit or some piece of news for these stocks to go nuts. That's my feeling.
Yeah. How about this? At some point, we will look back on a conversation like this, like what could cause small caps to outperform. But there's no doubt in my mind that at some point they will.
Right.
Like there will be a year where they're up 19 and large is up 4. I mean, I would think that's probably going to happen at some point.
Yeah. All right, let's talk about the meme stock stuff. First, from Scott Galloway's newsletter. Do you remember there was actually legitimate debates going on between finance people that what happens if everyone just indexes? Where is the price discovery going to come from? Where are we going to get the liquidity? Are markets going to be totally, insane at that point? From Scott Galloway. Q2 2025 was the biggest trading quarter in history. Retail investors bought more stocks and ETFs on a net basis than any other 6-month period over the past decade. JP Morgan posted its second best quarter ever. Citibank had its strongest second quarter in 5 years. Remember Citibank? They used to be a thing. It used to be one of the top 10 companies.
I used to.
Goldman Sachs,
I was a temp at Citibank.
Oh, really?
It's my alma mater.
Goldman Sachs logged the most trading revenue in Wall Street history. Together, the 5 largest banks pulled in $34 billion in trading revenue, up 17% year over year. It's a great year to be the middleman. Brokerage stocks are soaring. Charles Schwab, Coinbase, and Robinhood are up 29%, 61%, and 174% year to date, respectively. I guess we don't have to worry about the price discovery thing anymore, huh? But is all this trading really helping price discovery that much? Or is it making price discovery even harder? Right? Do we actually need less trading? How's that for a hot take?
That's a terrible take.
I'm kidding. Well, think about it though. Back in the day, there was far less trading volume than there is today. Was there a really big problem with price discovery? I guess you could say that it was easier to shoot fish in a barrel for certain investors, but let's talk about Opendoor. A company that I think you and I bought when it first SPAC'd.
Mm-hmm. I definitely
owned
that? It. Yeah, 100% I owned it.
The story made sense. Opendoor came out and it was, hey, the iBuyer thing was, we're going to make it easier to buy and sell your home.
By the way,
right?
There's no alternate universe, but if there wasn't the insane housing market that we experienced post-COVID with the run-ups in prices, like who's to say that this wasn't a viable model?
Me. I think because Zillow tried it too. I agree. The testing ground for this model was the worst environment
absolute worst time
ever.
To test.
But I think we learned real estate is so local that you can't just input numbers into a model and then decide what a house is worth. They showed that they were like vastly overpaying for these houses.
Yeah.
People were saying like they're buying these houses and there's a mean dog next door or something. No one's ever gonna. But at the time the business model idea sounded right, and then the stock fell 95%. It was one of those meme stocks. It shot up immediately. I think you and I got out pretty quick. I might have even made some money on the stock. So it's been going up like crazy for the past 2 to 3 weeks. Eric Jackson, who has been on TCAF before, right?
Mm-hmm.
Once or twice. He put out a note saying like, this is the next Carvana. Carvana fell 95% and then rocketed all the way back up. And
Well,
he's
wait
saying,
a minute. Hold on. You're missing one part of it. Eric was on TCAF talking about buying Carvana before
I remember
like
that.
1000x'd.
Yeah,
And when
yeah,
he put this tweet out last Monday when Open was at 80 cents, and I swear to God, if I didn't need cash for a real estate purchase, I was very close to putting money in here, only on the thesis that, like, I don't know, he was right last time.
yeah, he's got some cachet, right? He's not just a person spouting
Yeah.
out. So I think his whole thesis though was fundamentally driven. He said, listen, the revenue numbers that people are projecting are too low. I think the company is going to make more money than people think. And then it got picked up on Reddit or whatever, and now it's been going crazy. Yesterday at one point, it was up 100% during the day. And then at the end in the last hour or something of trading, it crashed 40%. And it was at one point up 800% this month alone. So this thing went banana. And if you look at the chart of it, it's nuts. It is a huge spike, a massive drawdown, and then like a little turn up. But that little turn up at the bottom, that is like an 800% gain.
Can I say something? Eric is now getting into it with like the meme community. And he's, spurring on, encouraging, and he says he has a price target of 82. So I don't think that he's like looking to, bring people in and then dump it. That's like not what I think is going on here. But he is engaging with the crowd. And I'm kind of reminded of the scene in Spider-Man 2 where Doc Ock has like the little thing in this that's like creating the power of the sun. He's like, I can control it. And it does it and it crashes it on him. I wonder if Eric is biting off more than he could chew.
So I think it's up 20% again this morning or something. We're taping this on Tuesday morning. This is a sub $4 stock. And he's saying, he's an $82 price target on it? Yeah. That'd be a little bit more room to run. Let's see.
All right, here's my take.
Wait, hang on. Joe Saluzzi says that U.S. stock market traded 20 billion shares today. Lots of price discovery yesterday. Open was responsible for 10% of the volume, almost 1.9 billion shares.
Wow,
unbelievable!
I saw Luke.
This is not a big company.
Luke Howard tweeted that Opendoor did more volume than Microsoft yesterday, which is hilarious.
And this is a sub $3 billion company, so it's a decent sized company. It's not huge. This is. What do you think about all this stuff?
Here's what I think. If David Einhorn got on stage and did a deep dive fundamental pitch for Open and why the stock was undervalued, I think it would have maybe gone up 1%. So the fact that hedge fund managers, and in fact, that's my opinion. I can't prove that. But this idea that retail investors now have the ability to swarm like a beehive or whatever, or a piranha attacking something, it's pretty wild. It's pretty wild to see.
It's obviously not going away. People thought 2021 is a blip. Once the speculative activity slows down, this won't happen anymore. The funny thing is, coming out of the great financial crisis, you talk about the hedge fund managers. They would get up at, what's that conference, IRA or whatever?
Yeah.
And they would talk about a company, and this was Ackman too, Ackman and David Einhorn. They would talk about a company they're shorting, and that stock would immediately get killed, right? That was the mentality back then. Let's look for something to short. It's the complete opposite now, and why I think that the 2020s is like the risk, whatever, appetite from everyone is just totally different now. We're in a different ballgame, and with the internet, the information age, I don't see this kind of thing completely going away.
No way. We're not going back to the way things used to be. No.
So here's the thing.
way.
So when thinking through like the Fed's decision, we're going to talk about the Fed in a little bit. What matters more? A bunch of people speculating on Reddit about a meme stock.
Dude, when people say that, like when people post a chart of Open, it's like, LOL, the Fed has a cut. Dude, what are you talking about?
Yes.
The Fed does not care about speculation in Opendoor.
Well, what matters more, that or residential construction coming to a standstill because mortgage rates are 7%?
Yeah,
what do you think matters more?
Right.
Do you think it's too cute to say, well, people who can't afford to buy a house are taking the down payment they would have spent and they're speculating in the stock market? That's too cute, right?
Delete that from your brain.
Yeah, I thought so. All right. Exhibit A chart of the week. Go to exhibitaforadvice.com to sign up. People who are signing up are loving it. They're using it with their clients. Every week there's a chart of the week. This one is interesting. So I'm going to talk about the 90s again. So it talks about age shapes our perception of risk, and it shows your current age and how many bear markets you've experienced.
Let me just give a quick Exhibit A plug. We have this for advisors. 70% of people that start a trial on Exhibit A are converting to paying customers. And shout to Matt and Eric and Aram, and those guys are doing incredible work. Less than 3% churn. Pretty incredible. Pretty incredible
awesome.
Numbers.
People who sign up love it. So they show the number of bear markets by age, and obviously the longer you've been invested, the more bear markets you've hit. I think one of the reasons that investors are more comfortable now with risk is because there are more corrections. Like I said, there weren't many corrections. There was no correction from like 1990 to 1997 in the S&P 500.
Hang on, Black Monday was a pretty big deal.
Okay, I said 1990 to
I know, but you're acting like
1997.
people that investing in 1990 don't know about Black Monday or weren't investing in Black Monday.
So the majority of stock investors
That's true.
bought their first shares after 1995.
True.
It was a very small amount in the 80s. So my point is, the reason people were so freaked out by the 2000s is because they didn't have a lot of experience with this stuff. We've now had 3 bear markets in the course of this decade alone. People who invested in Bitcoin have sat through 70, 80% crashes on multiple occasions. I think that's one of the reasons people don't freak out anymore, is because they're more used to them. Whereas in the past, you had this long period where people didn't have this stuff to live through.
Yeah,
And
that's a great point. That's a great
Gave
point.
up on it.
I wonder if people in the late 90s like legitimately thought, or at least behaved as if it was never going to end.
Yeah,
and I think people now know that, you know, it will end, it will resume, it will continue, we'll get setbacks.
Yeah, and you deal with it. Yeah. All right. So this is from Buco Capital. Someone tweeted, everyone has been taught, which I think is completely absurd, that investing is easy. And Buco Capital says, and I think there's obviously a little bit of tongue-in-cheek here. He says he's exactly wrong. Investing is easy. Buy the 500 best businesses in the world. Enjoy your life. Play with your kids. Buy the dip. Never sell. Be an active member of the community. Double your money roughly every 7 to 10 years by doing nothing. Investing is easy.
You think Buco's being facetious? I don't.
Okay. Maybe he's being totally. Here's the way that I would phrase this. I would never say investing is easy. I would say investing is simpler than it's ever been. That's a simple form of investing. But there are always going to be periods where it's not very. There's no way anyone could live
April
through the 2000s.
2025?
Huh?
Like April 2025?
Yeah, that was. And there was certainly.
I mean, dude, you were the most bearish you've ever been.
Yeah, and I was still buying stocks.
No, I know. I'm just saying, like, that was not scary.
Yeah, of course. Yeah, we had our president was literally trying to tank the market. That was kind of scary. But I'm talking about the 2000 period. There's no way anyone lived through that and go, this is easy, right? And so there's still going to be I would say 75% of the time it's easy. How's that?
Yeah.
But those other 25% are still going to test you. But I would say the Buffett quote of investing is simple but not easy. I still subscribe to that. And the other thing is, it's really hard for people to just do this. Put money into something and then go live your life and not be tempted, because there are a million different things to invest in these days. Well, why am I not invested in this? Well, this person got rich doing this. Look at how quickly they got rich. That's the hard part.
Yeah. Yeah, no.
That's the not easy part.
I would and will never say investing is easy, because forget even about like the bear markets and stuff. But to your point, the temptation. I mean, there's always something trying to distract us from.
But investing is simpler than it's ever been. All right, another email about the sign of the times. You guys keep talking Robinhood, obviously, and maybe to trim after this run. I bought this in March for about $37 a share in my Roth. What's it at now? And believe strongly in the future for them. Obviously easier after 180% gain. Tell me I'm crazy to just leave this alone forever-ish. It is now 50% of my Roth, but still only 20%-ish of investable assets. Not asking for financial advice. I wrote it back and said, hey, does this make you nervous that Robinhood is 50% of your Roth IRA? And he replied, not really. I'm 40 and have 2 kids in private school. Parents help a bit with that. But no, I kind of learned over the years to just be hands off and let winners ride.
Okay.
If I give back 20% after a run of 1,000%, oh well. My 401k and traditional IRA are all indexes, so I just try to single in during major pullbacks, ride that beta for a bit, and level back off into VOO and QQQ. But Robinhood feels different in the moment. Go figure.
Okay. This has nothing to do with Robinhood. By the way, I love how he ended the email not asking for financial advice.
Yeah.
Okay.
Good disclaimer.
This is not a statement about Robinhood. We've spoken about this many, many, many times in this podcast. Most stocks suck. And most stocks eventually die. Most stocks are not worth buying and holding. And what do I mean by that? This is a stat that I'll repeat. 70%. No. I'm sorry. 40% of all stocks in the Russell 3000. This is from JP Morgan's Agony and the Ecstasy of Stockpicking. 40% of all Russell 3000 stocks from 1980 have had a 70% decline from which they never recover. 4 and 10. Okay?
And Robinhood's the opposite. Robinhood fell 90% and it did recover.
Yeah. So again, Robinhood is an outlier. It's done incredibly well.
But it fell 90% 2 years ago.
So most stocks are not worth buying. Most individual stocks are not worth buying and holding forever. Now, maybe Robinhood will be the NVIDIA. Not literally NVIDIA, but maybe Robinhood will be the one. I have no idea. But just keep that in the back of your mind.
Yeah. A concentrated position like this, it's a way for you to make a lot of money and lose a lot of money. And you just got to figure, if it's 50% of my Roth or 20% of total, and it gets cut in half, and it stays that way for 3, 4, or 5 years, how am I going to feel?
Yeah. Now, if you say to yourself, guys, I get it, and I'm comfortable with that because of the reasons I just laid out, then more power to you.
Yeah. But I would say more people are comfortable taking that kind of stance now than they have been in a long time in the market.
But it's also not irrational, because if you are, let's say, doing all of the other things right, with your 401k, and just saving in indexes and whatever, and you want to get a little nuts with some individual stocks, okay, cool.
Yeah. Just go in with your eyes wide open.
It is also true that you can have a 100 bagger. And if you get one of those, it can change your life.
Right. All right. Sean sent us this. I think this is from DataTrack. It's the University of Michigan.
It says it's from Paulson.
Oh, sorry. Looks like a DataTrack chart, right?
It does.
So they look at the consumer sentiment by wealthiest 25%, less the consumer sentiment of the poorest 25%. It's crazy that we have the ability to look through this data like this. And this is from Sean. And the 25% wealthiest feel nearly the same as the 25% poorest on the survey responders. Sentiment among the rich is only 3.3 points better than the poor, which is lower than 98% of the time since 1979. That's kind of wild to me.
Do you make anything
especially with
of
the
this?
stock market booming. I continue to think you can't trust sentiment readings.
Yeah, to me, this is interesting, but it's garbage can. It's interesting in the sense that it confirms that surveys are nonsense, especially now.
Yeah. I think now the internet has broken surveys forever.
Yeah.
Even though we'll still probably use them. All right. Walter Bloomberg last week tweeted, this was going around on Twitter for like a half hour. People said, all right, Trump's firing Powell. Like, sources say. I don't know who these sources are. But if it's in all caps, you pay attention, right? I think I tweeted this. The all caps guys, they're wrong like 87% of the time, right? But they don't care.
All right, but I think he's just pulling from a feed. Like,
I know he's not. But a lot of people were saying like, listen, Trump is going to fire Powell, and then they went to a news conference and Trump said, no, I'm not going to fire him. He's done in like 7 months anyway. Here's my take that I've had for a while now. I say Powell is the last independent Fed chair that we will ever have. From now on, people are going to say, no, you know what? We need to control this somehow. And I think this is the kind of thing where even if, let's say Trump did fire Powell, people were saying, listen, stocks are going to crash, rates are going to spike, the dollar is going to crash, confidence is going to be gone. I actually think the opposite. I think you'd probably get an algo-driven thing for like a couple hours. And in the short term, things would be fine. The problems would be more like longer term. Is there a trust, faith issue? I don't think the markets would really crash.
I don't think they would give a shit at all. Why would this be the thing that crashes the market? Who cares?
And
oh no, we've lost political norm. What? How does this impact NVIDIA's earnings? Nobody cares.
And let's say presidents in whoever party's in office does kind of semi-control. The funny part is that Trump did elect Powell. I think the Fed matters most.
But did you see that he was saying that like he's not sure how he got appointed?
Yeah. And I think the Fed matters most during a crisis situation. Like, I think the best thing Powell did was keep things afloat during the pandemic when things really, like, the markets really could have torn apart at the seams. Like, the credit markets, we could have had a nasty. So the fact that they pulled things together and kept them together during a crisis, I think that's the thing that matters most. You could quibble with, they should have raised rates 6 months earlier here. They should have cut 6 months later here. Whatever the thing, I think
I don't think that's a quibble.
I think those on the edges, I don't think it matters as much as people think. I think the thing that matters most to the Fed is what they do during a crisis. And then obviously, like the Fed has never pulled the punch bowl away too early in a bubble situation. Like they've never done that. They've shown they've never done that. So I don't know. Like would this just mean more volatility in the rates markets and in the equity markets? Probably. If because guess what?
I don't think the stock market would care.
No, I'm saying if the president is kind of telling someone in someone's ear, because you've heard stories in the past about Nixon Young at his Fed chair and his Fed chair telling him to get lost in shoving matches and stuff. So the president has tried to control the Fed chair in the past before. But let's say the president does have control, or Congress or whoever is in power, and they keep rates lower than they probably should be. Does it just introduce a little more volatility in the markets? Is that the end game?
I don't know. I saw somebody like asking, what's gonna end the party this time?
Yeah, that was me. I asked that.
No. I saw this on Twitter.
Okay.
Particularly the memeier areas of the market.
Oh, okay.
Like in 2021, it was obvious. It was aggressive rate cuts, just suffocated these companies, right? Like there was no
rate hikes. Hikes mean?
Yeah. What did I say?
Cuts.
Oh, my bad. Suffocated these markets.
But this is happening with rates at 4.5%.
No, but the point is, the next move in rates is going to be lower.
Right.
So it's got to be something that.
Well, it's an economic slowdown.
I guess.
That's the thing. That's the thing. None of these. The meme stock stuff has never lived through a recession. In a recession, a lot of these companies fall 80%.
No, they did. In 2022. I mean, to me, that was a recession for these stocks.
Yeah, like but I'm saying in an actual economic recession, these stocks will all fall 70 or 80%. That's what will happen.
But again, I think these companies experienced a legitimate recession.
What do you think happens to Bitcoin in a recession? Is Bitcoin down 50% in the next recession?
Yeah.
Probably, right?
Yeah.
Yeah, yeah, that makes sense to me. From Colin Roche, I guess we'll talk tariffs. I've seen a lot of people say, like, see, tariffs, they're here and they didn't cause inflation, they didn't cause a recession. Everyone who was worried about them is wrong. But Colin calls them the teeny tiny tariffs. So he says, in the first 6 months of the year, we've incurred $86 billion in total custom duties. That's like tariff revenue brought in. In 2024, in total, we brought in $82 billion. So he says we're on track to double the custom tariffs. But that's just not much in the grand scheme of things. He says back in April, when the tariff banter was at its peak, the administration was saying that they could bring in $3 trillion. And that's why the market panicked, because that's a colossal tax increase. So he's saying, like, if you just go by the receipts, not by what people are saying, not by the tariff rates that people are saying in letters, the numbers haven't increased all that much because we're not bringing in that much revenue. So we haven't done them yet, and that's why the market doesn't care. Because yes, some prices have probably raised, and it's a drop of the bucket in terms of the economy. $82 billion or $86 billion in the grand scheme of a $30 trillion economy doesn't matter. Right. I get. I don't know what the number would have to go to make an impact, but it's a lot higher than it currently is.
Okay. We haven't gotten a lot of emails about Bitcoin, which is kind of interesting. Like, there was much more. Did we talk about this last week, that there was much more fervor when Bitcoin hit 60 than when it hit 120?
I think we got a lot more emails when the ETF came out.
Yeah. All right. Anyway.
Yeah, you're right. It's because because crypto is becoming TradFi. That's why it's becoming just more accepted.
I guess. Yeah. So somebody wrote in, the subject line was still trying to understand Bitcoin. I've been in the market for a few years now, and I would like to think I've built a pretty sound foundation for someone at my age of 27. I genuinely enjoy following the market, but I've never really understood Bitcoin. The fact that it was created by some mysterious guy named Satoshi. There's no clear use for Bitcoin. Imagine trying to explain to your grandfather, so this is a modest creator, no central authority, no real use case, but trust me, it's worth 120,000 per coin. I'd love to have some exposure, but I just don't understand it. Can you help the listeners make sense of Bitcoin beyond it being a hedge against inflation or the dollar? Isn't that what gold is for? At least I could touch things with gold. Right now, it still feels like one big myth that everyone's just decided to believe in. All right.
I saw someone tweet last week, like, people just created a bunch of numbers and now it's worth $2 trillion something. So when you break it down to its core components in those terms, it does seem like, wait, what?
Yeah.
That still is that's a part a lot of people at the beginning always have trouble wrapping their head around. Wait, so we just decided this is worth this and now it is?
Yeah. All right. So my answer to that is, you know the scene in Dune 2 where Javier Bardem screams, "I don't care what you believe, I believe." That's how I think about Bitcoin.
Yeah. It's a religion. It is.
And when I say like, I don't care what you believe, I believe, I'm saying like, that's what the Bitcoiners would say. Right.
Yeah.
That's like me. And I definitely don't want to convince anyone of anything about Bitcoin because that's for you to decide on. And certainly at 120,000, I'm not like, yes, buy more because it's going up. But for me, it's just.
I can't wait for the Photoshop of you in the Javier Bardem Dune thing. Can I be Chalamet in that one? Maybe.
It's just, for me, it's always been about this. It is, for me, supply demand. That's it. I have not.
You're an Econ 101 guy.
I mean, I've been saying this for how long? There is more people that want to buy Bitcoin than people that want to sell Bitcoin.
Yeah, and then this guy would come back and say, "Well, why don't they just create another Bitcoin?"
Okay, why don't they just?
Yeah, but the thing is, they kind of tried. Remember Litecoin and like Bitcoin Cash and
Bitcoin is a $2 trillion asset.
It's a brand at this point.
It is a brand, and you can't just make a new brand. Why doesn't a company just make a new Netflix? I mean, maybe a ridiculous comparison, but all right. Anyway, getting back to the supply demand, because I don't care to have the philosophical debate. I don't care if you think it's an inflation hedge or a dollar hedge
I guess
or whatever.
at this point,
I don't necessarily believe any of that, but I don't care. What?
But if you don't get it yet, you're probably never going to get it.
Well, listen, if I am this person and I've watched Bitcoin go from 10,000 to 120,000, I'm not like all of a sudden be like, oh yeah, now I'm going to buy.
Right. Exactly.
Right.
And you
like,
probably shouldn't.
Oh shit. Now I get it. Now I know why I should own some. Like you can't have the mental flexibility to do that because it's just too self-destructive.
Yeah. And we said like, if you didn't love it at 60, you shouldn't love it at 120 either.
So Bitwise has this chart that shows new Bitcoin supply since spot ETPs launched versus Bitcoin purchased. And it is over 2-1 in terms of Bitcoin purchase just by the ETPs, to say nothing of spot, to say nothing of treasury and Michael Saylor and all that he's doing. Here's this chart from Todd Sohn showing the huge swing from Bitcoin and ETH outflows in early April, in the first quarter, to $11.7 billion in. So
how much is in the Ethereum ETFs now? Do you have any idea?
Is it 25 billion? I don't know.
Okay.
Anyway, so for me, I'm not here to explain to somebody why they shouldn't buy Bitcoin. Again, I don't care about the philosophical discussion, but there are enough true believers, enough people that for them it's a religion. And there are just more people that want to buy than want to sell. And at some point there will be an equilibrium. But
I had the same feelings as this guy when I first started learning about it. And I'd say 2017-ish is when I really started like, okay, when that first thing happened. And instead of banging my head against the wall, I just bought some. Just a little bit. I didn't buy a lot. I bought a little bit. And I don't know. The first time I bought it was at like $3,000 or something. And I didn't put a lot of money in. And I just had to do it just to like schmuck insurance, whatever you want to say. That it made me feel better about watching the madness around it.
Yeah. Yeah, me too. And not here to defend I'm not a technology person, but like to say that, oh, it's just like this made up thing. Like, well, I mean, the Bitcoin blockchain works really well.
Yeah. Unhackable so far, obviously.
It just keeps working. And that's not nothing. All right.
It would be kind of hilarious though if AI got so smart it just hacked Bitcoin.
If AI got so smart, why wouldn't it hack the Federal Reserve? Why wouldn't it go after your bank accounts? Why wouldn't it hack Schwab? Why would it hack Bitcoin?
Because hacking Bitcoin would be way more funny. That'd be way more hilarious to the internet, right? True. All right. This one's from DataTrack. Nick and Jessica. We've talked about this a little bit. Remember we talked to David LaValle from Grayscale about this, and a lot of the crypto people we've talked about said, listen, we think volatility in Bitcoin is going down or it will go down. And Nick and Jessica at DataTrack says it has become less volatile. This favors incremental adoption, but also suggests future returns will be lower than historical norms. So they show the rolling 100-day standard deviation of daily returns. And this has gone down a lot. It's funny that, remember that 2017 period, that was nuts.
Mm-hmm.
It was rising and falling 20% in a day. That was like the first real Bitcoin craziness when like retail or people actually talked about it. But this makes sense to me. At whatever $2.5 trillion, that volatility would decline and also returns would decline. All right. Is the Midwest recession proof? I ask you. This is
Recession proof? Do you mean the housing or what?
Yeah. This is from Resi Club, Lance Lambert. He shows housing markets where prices are falling. And he's showing different, and they're all Florida and Texas, Louisiana. Most of them are Florida and Texas.
These are all places that are either weather driven and or real estate that had a big run up, right?
Yes, I think that's the point. So he shows the 1 year change in metro level, and it shows where things are falling. And it's the West Coast and it's the Southeast. That's where home prices are falling, essentially. And then anything in, not much on the Northeast, a little bit, but the Midwest, there's no areas, no big metro areas where prices are falling. And then he shows the prices where they're rising. And obviously in those areas, prices are rising. But I think, yeah, you could say like the weather stuff, but part of it is the fact that the places that are falling, there was a huge migration of people and prices went up a lot.
Yeah.
And that's part of it. So yeah. But I'm still sticking with my thesis that the Great Lakes are my greatest hedge going forward.
I like
Fresh water. We take our boat out to Lake Michigan and we're in 20 feet of water and it's crystal clear and I can see to the bottom like it's the Caribbean.
Wow.
It's nuts. I wish I would have dropped my phone in that lake instead of the other lake, which I'll get to in a little bit. You always ask, I think we had this discussion before. You always say, like, I can't get over prices of this. And for you, it's some meals or like just the inflation stuff that you still have a hard time wrapping your head around. Like, I get it, prices are up, but like you see this price and you go, oh my gosh, I still don't get it. And I'm still trying to wrap my head around housing prices. I go on a jog and I go like the same route every day at lunch, right? There's a nice path and there's this house that looks like it was built in, I don't know, 50s, 60s, 70s, old house. I put pictures in here and it's for sale. And I thought, when I get back, I'm going to take a look at this. And you can see there's no modernization of this house whatsoever. This house looks like it's still from the 80s. And I look at the price and it was $425. Geez, even for Grand Rapids, that's a lot of money. Not a hugely desirable area, just decent area, old house. And I looked at the Zestimate history. And this thing was selling for $200,000 in 2016. It's up 85% in the last 10 years. So my question to you, if you were a young person who's trying to buy a starter home and you're ready to give up on the system, would you become a socialist or would you become a libertarian? Which one would you become if you're ready to just like throw it all away and do something? Because I still can't believe that this stuff
I would be a libertarian because that's like the burn it all down mentality.
Yeah.
Socialism is like way too calm for me.
But you'd have to pick one of them, right? If you're like ripping your hair out because these are the kind of starter homes that you're going to buy. And obviously, guess what? You're not going to get your dream home right away. Not everyone does the first home you buy. I still just have a hard time wrapping my head around housing prices. Do we get an update from you on your housing situation? We're going to save it
Next week.
Okay. Here's a middle-aged thing that I really, really enjoy. So we're doing a home renovation right now, and we're putting in new flooring. I think I've talked about this before. We had to get the whole house ready for new flooring because we're getting the whole house done, which is insanely expensive. And we for the last 3 weeks, we've been slowly but surely throwing stuff away, right? All the stuff has to come off the floor, out from under the beds, put stuff up in the closets. I can't tell you how many trash bags full of stuff that we've gotten rid of and thrown away. It seems like a waste, but that is a very fun purge to do in middle age. Like
I can't wait.
It feels so good to get rid of junk.
Yeah.
That just has sat there forever that you don't use.
I saw an Instagram story where it was scanning through a lot of stuff that's being thrown out. And the caption was, "This used to be money."
Right? Yeah.
We buy a lot of shit. Us
We really
Americans.
do. Speaking of which, someone sent me this blog post, and I don't know how they figured this out. I didn't really get the math, but I'm going to just pretend like they did their research. They say, this is poorchoices.org. 52 million Americans can't park in their own garage because they have too much stuff. They somehow did the back of the envelope math on this and figured out that many people can't park in their own garage, which is kind of crazy. All right, survey of the week from Scott Galloway. Share of Americans who are millionaires, 8%. Believe they will be wealthy, 35%. Believe the next generation will be wealthy, 75%. And they say wealthy is defined as having a net worth of $2 million or more. This is one of the reasons that this is the American exceptionalism thing.
Yeah.
We are delusional.
Yep.
Sometimes to our own detriment, but also oftentimes in the benefit of society.
Mm-hmm.
Right? These numbers there's no way these numbers could possibly be correct.
Yeah, do the survey in Great Britain. No offense, but it's different.
Yes, it's true. Okay.
All right, Nick Majuli has a new book, The Wealth Ladder. And it's one of those books, I haven't read it yet, but I will because he's coming on TCAF this week. That is not just like, another book about personal finance. It's like one of Nick's strengths is it's tangible. It's actionable. And so whether you are just getting started.
Or it's not just philosophical or here's some context.
Just fortune cookie stuff. Whether you were just getting started or you're somewhere in between or even further along in your journey, like at every stage, there's something that you can apply to your life.
Yes, and we talk a lot about this. And our audience spans a vast number of these different ladders, right? And yes, it's a very simple, easy book and idea, but Nick puts a lot of thought into these kind of things too.
Yeah.
And very clear, concise writer. Nick's the man. Good stuff. Go get it. We've been talking about the upper middle class thing, and CNBC had this cool thing where they actually showed, and the retort is always, well, where do you live? They showed the low end of upper middle class and the high end of upper middle class and the median by every state in the Commonwealth. Is that still a thing? Commonwealth? So they say nationwide upper middle class households earn between $117,000 and $150,000, according to Census Bureau. But then they break it down by California, much higher, obviously. West Virginia, a little lower. New York, higher. Michigan, a little lower. Michigan is pretty close to average, actually. But we'll click the link, put the link in the show notes. You can click through all of these, and then it can make you feel either way better or way worse about your current situation again by drilling it. But the funny thing is, you get the state level data and you go, yeah, but I live in this city. But I live in this neighborhood.
Yeah.
But anyway, they do a good job of breaking it down by state. All right, what's this retirement thing?
We'll blow through this quick because we're getting kind of long here. But somebody sent us a retirement, a summary from ChatGPT, which basically shows that people are working longer. So it shows like the percentage of people that retired at age 65 to 69 and age 60 to 64 in 2000 to 2007 versus 2016 to today. And more people are working. So this shows that more people in these later age groups are still working. And so it's like, well, what do we do? What happens?
Are we sure this is verified stuff? This is AI, so I'm not.
Whatever. But let's just, maybe it is, maybe it isn't. Not really that important.
But this makes sense to me.
Yeah.
People are living longer.
But so this chart from Semblist shows what does the federal government spend money on? And it shows non-defense discretionary spending as a percentage of GDP, which has gone sideways to down, versus entitlement spending, which is straight up to the right. And here it is. There's a social safety net.
So you tying these together is kind of like Social Security is the answer?
Yeah.
Yeah, so that's how people, yeah. So yeah, the question is like, these numbers make you think, how in the hell are some of these people retiring in Social Security?
Yeah.
And working longer. And that if you haven't saved enough money, that's the answer though.
Yep.
Right?
Okay. We got 3 emails about my broken TV, which I was able to fix. And I commented last week on how the cheaper TVs, the picture quality is fine, but the problem is the apps, they slow down. So we had 3 people email us. I'll just read one. These days, smart TVs are cheap because you are the product. Once you connect a smart TV to the internet, it broadcasts your watching habits back to advertisers, blah, blah, blah. So anyway, buy an Apple TV or a Roku, plug it in, and use that instead.
Yeah, or the Kindle Fire. I use the Kindle Fire Stick.
So I was like, oh, duh. So
I didn't even realize I already. Yeah, so they're saying that that app, as long as you have internet, that will be the fast one. Yes.
IMAX put out tickets for the Odyssey, which is not coming out until 2026. And I feel like, what are they doing? Like, I don't get it. Well, anyway, the one in Lincoln Square sold out in under 3 minutes.
Jeez.
Pretty wild.
I don't know. That I'm sure that movie's going to be good. It sounds like a book report to me. Just because I remember reading that book in high school or college or whenever I read it.
Yeah,
It feels like homework.
I'm all the way in. So IMAX, there was an article in Bloomberg talking about how like Cinemark and Regal and Marcus are trying to fight back against how powerful IMAX is becoming with all the branding. Because people are going to theater less, obviously, and when they do, they want to go to one of these premier theaters. So last week, I don't know if Duncan hopped on the stream or if he told me after about A24. So A24
conversation after.
Okay. A24 is another very powerful brand. Not very powerful is maybe strong, but it is the brand in independent movies. It's them and Neon, but A24 like are absolutely kicking ass. So Duncan told me about this service, and Duncan, come on and correct me if I'm wrong, where you pay like $10 a month and you get access to one free new release a month. So I signed up and I got a push notification. You can see Eddington. What's Eddington? I Google it and I see Pedro Pascal, Emma Stone, Joaquin Phoenix, and Austin Butler, a sheriff in the small town. I'm in. Yep, say no more. I'm in.
Hey, Joaquin Phoenix and Pedro Pascal. I've never heard of this.
So I will give my review of the movie later, but I got an envelope yesterday from A24 with this little like packet of whatever. I don't know what you call this, but it's just a little magazine. But check this out. It's postcards, promotion from within the movie. So Joaquin Phoenix plays a sheriff.
Oh, I thought it was an actual.
No, Pedro Pascal plays the mayor, and they go at it. And I'm thinking, like, these guys are like, this is like genius marketing.
It's pretty smart.
Isn't that really cool?
But I've literally never heard of this movie before, so maybe they aren't geniuses.
I'll talk about it later. But anyway, thought that was neat. Thank you, Duncan. Great idea. All right, Ben, so you dropped your phone, huh?
Yeah, so we were out on the pontoon, and there was a storm coming in. The kids wanted to get tubing in before it rained. So we whip them around in the tube a few times. I'm getting really good at, they like to do donuts in the tube. So I fire them around in a circle, and you slingshot. Now the kids weigh a little more because they're bigger and they fly off. So we hustle back, and my wife and kids get all the stuff off the boat, and I say, just leave me here. I'm the dad, so I'm always left to put the cover on, right? That's a dad job. Everyone leaves me, and I put the cover on. Fine, I don't care. I'm hustling to put the cover on because I want to get it before it gets wet. And on a pontoon, you put the cover on, and you put these like sticks in the middle to hold the top up so the water will, like a house, right?
Yep.
But then you have to crawl out underneath the little door to get out. And so I'm crawling out. And usually when I'm on the lake, I have this little Patagonia like messenger bag. And I put my boat keys in it. I put my wallet in it. I put my phone in it because I don't want to drop anything.
When you say messenger bag, you mean like man fanny pack?
No, it's like over the shoulder.
Yeah, it's a man fanny pack.
But with a backpack behind it.
That's a man fanny pack.
I'll show you. It's not a fanny pack.
It is.
Yours is a fanny pack.
Except, no, mine goes over my shoulder too, sir. Except what? Your bag's in the back, mine's in the front. So somehow you're better than me?
It's a backpack. You can't wear it in the front. You can't wear it on your fanny. Maybe you could. So I usually put my phone in there. I was in such a hurry to get out of there because I wanted to beat the rain. I had all this stuff. I have like an empty can here. I got this. I got a towel. I'm trying to get everything off the boat. And my phone was in my hand. I didn't realize it was my hand. So I crawl out. I get up. I drop. Hits my knee. Boom. Hits the front of the boat. My foot comes forward, not even realizing it's happening, and then plop into the lake.
Devastating.
And it's one of those where you just go, well, shit. And you kind of shake your head. I didn't freak out, but
how do you put your life back together? That's
the thing. And we had dinner plans that evening, so I couldn't go get a new phone. So I went basically 24 hours without a phone. And I got to say at first.
Don't tell me that you enjoyed it. Don't.
No,
it was socialist.
I found myself reaching for it all the time. When I woke up the next morning, I thought, oh my God, where's my phone? What did I do with it last night? I kind of enjoyed the break from it.
Okay, then give it to your phone, tough guy.
No, but then you realize, so I had to drive a half hour away because where our place is, there's not a lot of stores. I had to drive a half hour away to the AT&T store the next morning. And guess what? No CarPlay. Couldn't listen to anything. And guess what? No CarPlay. I had to write the directions down because I'm so reliant on Google Maps and Apple Maps, I got lost trying to find the store because I've never been there before. And so you realize how reliant you are on this stuff.
Did you pull over and go to a 7-Eleven and ask somebody for directions?
Luckily, I had my Apple Watch on, and I figured out you could type it into my Apple Watch. Without that, I was lost. And so you realize how much and so I thought that movie with Ethan Hawke and Julia Roberts, Leave the World Behind, where like all of a sudden the power grid and internet is shut off. Like that would, if that happened to us for like 3 days, humanity would like cease to exist. There would be riots. People like, you don't realize how much you rely on your phone for everything these days.
Yeah.
People would lose their minds.
All right, I could be wrong about this, but are street sweepers...
But also, sorry, losing your phone is kind of like when you have a flight delay or something and you want to complain about it. No one else cares but you.
Yeah.
It's the biggest pain in the ass to you, but everyone else is like, that sucks.
Yeah, I have my phone.
Yeah, right. I don't care about you.
All right, I could be wrong about this, Ben, but are street sweepers the biggest scam on the earth?
Really?
You and I were talking yesterday. I said, hold on, there's a street sweeper next to me. I couldn't hear you. And I'm looking at it. I'm like, hey, wait a minute. What is this person doing? If Elon could get back in there and doge out these street sweepers. So it's these big trucks that sweep the sidewalk. I mean, it brushes the sidewalk.
See, the thing is,
it's like getting rid of garbage. What is it doing? Literally, what is it doing?
So in Michigan,
it's moving food around the plate.
So in Michigan, we really need these because they put dirt down on the roads in the winter. So on the side of the roads, it's full of dirt. So after the winter, they have to come through and street sweep.
You know what we don't have
really
in America?
Dirt.
Dirt.
Yeah, see, that's the problem. So in Michigan, we need them. Maybe you're right. They're checking a box that, we did it.
Yeah, I can't. I mean, maybe street sweepers, maybe they do something I don't know about. Maybe they are actually sucking up the garbage. But as far as I can tell, they were moving the garbage from this side of the road to behind the truck. And I couldn't hear you. All right. I want to play something for you, Ben. I was going through my notes today on my phone, just deleting a bunch of stuff. And I saw this and I said, wait, what is this? Oh, yeah. I wanted to share this with you. I'm going to share my screen. So, listeners, I heard this commercial for a drug the other day, and I couldn't believe it. The drug is called Jardiance.
Just
anyway,
rolled off the tongue.
Ben, listen to this. Just listen to this.
And for adults with type 2 diabetes and
Can you hear that?
Yep.
Okay.
known heart disease, Jardiance can lower the risk of cardiovascular death too.
All right, Jardiance.
Okay.
Serious side effects include increased ketones in blood or urine, which can be fatal. Stop Jardiance and call your doctor right away if you have nausea, vomiting, stomach pain, tiredness, trouble breathing, or increased ketones. Jardiance may cause dehydration that can suddenly worsen kidney function and make you feel dizzy, lightheaded, or weak upon standing. Genital yeast infections in men and women, urinary tract infections, low blood sugar, or a rare life-threatening bacterial infection between and around the anus and genitals can occur.
Excuse me? A rare life-threatening bacterial infection between and around the anus and genitals can occur? And I'm out. Wait, does it get worse or is that it? Let's see.
Call your doctor right away if you have fever or feel weak or tired and pain, tenderness, swelling, or redness in the genital area. Don't use if allergic to Jardiance. Stop use if you have a serious allergic reaction. Call your doctor if you have rash, swelling, difficulty breathing, or swallowing. You may have increased risk for lower limb loss. Call
Lower limb loss? What?
your doctor right away if you have new pain or tenderness, sores, ulcers, or infection in your legs or feet.
Jardiance is really...
All right, anyway, the commercial is like 20 seconds, but the disclosure, like the risks are like, what?
That sounded like an SNL skit.
So that's just exactly my reaction.
Plus, they're dancing the whole time. That's
lower
okay.
limb loss. But this is like the not quite as bad. But you know when you're let me stop the screen sharing. When you're on the airplane and they've got to go over the nonsense of what to do, and if there's like an emergency, pull the raft. It's like, what are we doing here?
Yeah, I wish we could skip that.
Can we just skip all that? Like, so these are regulations that need to go. Anyway, lower limb loss. Jeez.
All right, let's do recommendations. I rewatched Air this week for some reason. I just like to have a movie on in the background. It came up. I think it's one of the best business movies of the century. I watched it the first time. I liked it. Man, that's a really good movie. It's just, Damon is so good in that movie.
Who else is in it?
Ben Affleck. It plays Phil Knight.
Yeah.
Jason Bateman is in it. Chris Tucker is in it. It's just really, really well done. And I think because it went straight to Amazon and it was around the pandemic, I think. But I think if we're looking for best business movies of this century, I have The Founder, Moneyball, Margin Call, Blackberry.
I
I think.
love Blackberry. I can't believe how
Very
how
good.
that
I think
movie
Air
was.
is in the same class of those for best business movies of this century. So we have the movies that or the shows that are filler shows, right? You're watching a show you like, you binge it, and then you have a filler show like in between days of the week when this show's not on, I'll watch this show. And for us, that was Day of the Jackal. And now, for whatever reason, there's just no new shows. I guess all the streamers decided like, we're not going to put any new good shows on. So we went back to Day of the
like
Jackal.
it. I like the break.
Yeah. So we, it's kind of nice for the summer, actually. Remember in the past when shows would not be on all summer and then you'd have to wait till the fall for a new show? That was fun. So we got back into Day of the Jackal and we didn't not like it. We just we never got pulled in. And now we're 3/4 of the way through and it's a very good spy, assassin show. It's really well done. Like guys shooting from 3,200 yards away for a kill.
Okay. Is it season 2 you said?
No, season 1. And
Wait, did you say you're rewatching it?
No, we started it. We watched a few
Oh.
episodes, and now we got back in, and we're almost done with it. But it feels like a movie in a lot of ways. It feels like a kind of assassin. Remember, there was the Bruce Willis,
I did.
Jack Black movie. All right, finally, they had It's Complicated on rewatchables, and I can't imagine that you've liked this movie.
I don't know if I heard of it.
It's Complicated, so it's Meryl Streep, Alec Baldwin, Steve Martin, John Krasinski. Came out in like 2009. It's a kind of rom-com they do not make anymore.
Okay. Yeah, never heard of it.
It's a movie about divorce, but for some reason, movies about divorce usually work. For some reason, that dynamic.
Oh, yeah.
So this is a couple who got divorced, and then they come back to have an affair together, even though the husband has remarried.
Mm.
And it would be way cheesier if it came out today. But there's a scene where Alec Baldwin and Meryl Streep are exes, and they happen to be at the same bar, and they're eating food at the bar and drinking. And it's one of the best chemistry scenes that I've ever seen in a movie. They're so good together. I don't think it's a Michael movie, but I haven't seen that movie in a while, and it's really, really good.
Okay.
They don't make them like that anymore. That kind of movie.
Yeah.
All right, what do you got?
All right. It happened to me, Ben. I'm an audiobook guy now. You know, the first audiobook I ever heard was The Hot Zone, which was a book that I listened to on cassette about the Ebola virus. This was, what year was this? I don't know. Midnight, 93. I was on a car trip.
Lovely.
I was on a car trip, and that's what we used to do when we took car trips. We would listen to audiobooks. So I just don't read books anymore. I was gonna say I don't have time. I don't want to dedicate time to reading books. Okay. I am a hyper productive person. I am never lounging. I am always doing something, and I don't want to sit down and read a book. I have officially admitted it to myself.
I'm a fiction only guy, but I read right before bed.
Okay. I can't do it. I just, it will not happen. It's that part of that chapter of my life of reading books. For now, it's on pause. Okay. I'm not saying I won't ever read books again, but for now it's on pause. All right. But I do love books and I miss books. So I was on my Spotify account and I saw an audiobook section. And I was like, okay, let's see what's up. So the first book that I saw, or one of the first titles that I saw, is called Best Movie Year Ever: How 1999 Blew Up the Big Screen. So I started listening to it, and because I'm always listening to something, whether I'm shopping or walking or driving or I always am listening. I don't know how many hours I listen to of stuff a week. But I'm like, hey, why don't I get audiobooks in the mix, right?
That's a great idea for a book, by the way.
So
this title.
I'm enjoying the shit out of it. The only problem with the Spotify audiobooks is that there's no chapter details. There's no text. So I think I have to switch to Audible because I do want to be able to highlight, right?
Oh, right. Yep.
So anyhow, I'm listening to the movie. I'm listening to the book, which does sound weird. I know it's not the same thing, but I don't care. And I wanted to take you through the list of 1999 movies. So
I'm looking at this right now.
Wait, hold on. Stop. This is my show.
Okay.
I had ChatGPT give me a list of the movies in 1999. I said, grab me the top 100 movies of 1999 by Rotten Tomato scores and sort them by release date. Okay. So I don't know if this is 100% accurate. Maybe there's things in here that we're missing, but listen to how crazy this is. All right. We're going to start in March, Ben, of 1999. How old were you in March 1999? In 1999.
I was a senior in high school, so I probably went to see half of these in the theater.
Okay. I was 14. All right. Cruel Intentions and Analyze This came out in the same weekend. All right. This is all in March. And then we got The Iron Giant, which I never saw, but was a big hit at the time. Then we got The Matrix. And I have to be honest, hand up, I wasn't impressed by The Matrix at the time. I thought it was overhyped. 14-year-old Michael.
I've never been a Matrix guy, but it was the effects were I was impressed with those.
14-year-old Michael was not impressed. So anyway, the book does a deep dive on like the different character, the story of how these movies got made and the actors and the what ifs, some of that sort of stuff. All right, then we move on to April. Man, April slaps. Go, a movie I never saw. But
I love Go. I still rewatch that to this day. It's a great movie.
Three Kings, love that movie. Office Space and Entrapment.
Wow.
Moving on
Sean
to May.
Connery.
Moving on to May. We had Election. I never saw that one. Did you?
Reese Witherspoon, yep.
Okay, and Matthew Broderick.
Yep.
So in May, you had Election, The Mummy, Star Wars, and Notting Hill. Not a bad month. In June, Austin Powers, The Spy Who Shagged Me, Tarzan, The General's Daughter, saw that one, Big Daddy, and Wild Wild West. Did not see that piece of junk. In July, the blockbuster month, we had American Pie, absolute classic that started the teen comedy stretch. The Blair Witch Project, I saw that in camp, scared the shit out of me. The Haunting, which was terrible, saw that in camp as well, and Runaway Bride. Then in August, The Sixth Sense, The Virgin Suicides, American Beauty, and The Insider. All right, I'm going to say something out loud that I might regret. This has shaking me to my core, Ben. So The Sixth Sense, I know for a fact I saw that on opening night with my dad. I'm positive of that, okay? That's not a movie you forget seeing. But I thought I was in fourth grade. Like in my head, I was like in fourth grade and I went to school the next day and like I was in music class when I told people about that. That never happened.
I didn't see that movie until it came out on video and it was never spoiled for me. That was the 1990s.
True.
There's no way a movie like that could come out today and not be spoiled.
But anyway, when I thought about that, about me misremembering where I was when I saw The Sixth Sense, I started thinking, did I actually see Field of Dreams? I know I saw Field of Dreams. All right. August. I know we just did. Oh yeah, August. We just did that. My bad. All right, September. Double Jeopardy, South Park, The Talented Mr. Ripley, and Sleepy Hollow. Then in October, we had Fight Club, Magnolia, Being John Malkovich, and Eyes Wide Shut. In November, we had The World Is Not Enough and Toy Story 2. And then in December, The Green Mile and Stuart Little. How nuts is that?
Wow. So you also had movies like...
And what did I miss?
10 Things I Hate About You.
Oh, yeah. Monster.
I mean, that might be the best movie year ever. You're right. I saw most of these in the theater.
Okay, so here's what I did
not see. It might have
see.
intrigued me enough to read this book, actually.
No, listen to it. Here's what I did not see this week. I did not see I Know What You Did Last Summer. Apparently, it was just pure dog shit, so thank you, I guess, for saving me a trip to the theater. All right, so that movie, Eddington. It's an Ari Aster movie. He is a writer-director. He did Hereditary and Midsommar, which I enjoyed the shit out of both those movies. Eddington was not for me, unfortunately. Eddington it's
a horror movie?
No. It is a film, that's for sure. It was too long. It was a real grown-up, mature movie. I'm just looking to have a good time. So if you're like a film goer, I think the critics will enjoy this more than the audience. Like there are parts of it that I enjoyed. It's just not for me. That's okay.
All right.
So, All right, we went long again. We're streaking.
Yeah, you read off every movie from a certain year. It was worth it for me. It brought me back down memory lane. I still remember seeing a lot of these in the theater. All right. Exhibit A for advice for financial advisors. Also, financial advisors, check out the Unlock. We got more stuff coming. Are you still doing it every single week?
Actually, we're rebranding. We're going to call the channel Talking Wealth. So yeah, Josh is hopping on this week. But yeah, we're cooking over there. We are doing advisor-focused content, industry stuff.
You know who I'm recording with this week is Bill Bengen, the one who came up with the 4% rule.
Oh, wow. Very cool.
He's got a new book coming out. All right. Email us, animalspiritspod@thecompoundnews. Wait, what is it? God dang it. Animalspirits@thecompoundnews.com. And thanks everyone for writing in, listening, following, leaving reviews, subscribing, all that stuff. See you next time.